Hey everybody, it's Adrian's doing Tricks CMT Charter Market Technician CryptoBirb, and I want to welcome you to the new new episode of our incredible technical analysis series. And I'm joined today by my very highly extinguished friend that I recently met in Abu Dhabi at one of the Formula One events. I'm talking about Arman Savjani, who's and one of the brightest kind of like spots, one of the brightest minds and intellects that I met, and accounting for the fact that he's at such an incredibly young age when compared to most of the peers in crypto, that makes it the whole thing even better. So welcome to the show, Arman. How are you feeling? How's it going on your end?
Hi, everyone. Thank you for joining us today in the Birb Nest. And thank you, Adrian, for having me on today. I'm really excited to be here today. And I've been looking forward to our conversation. And I'm thrilled to share my insights with all of you.
Love it, brother. So welcome to the show. And who's Arman Savjani for everybody's to know?
So, my name is Arman Savjani. I've been deeply involved in the cryptocurrency and digital asset world for several years now. My journey began with a fascination for digital currencies and blockchain technology during my early high school years, seeing the potential for significant impact on financial systems worldwide. I recently started my own YouTube channel, Block Talk, where I focus on breaking down market trends and macroeconomic influences through detailed technical analysis.
Love it.
Essentially, I aim to provide my viewers with clear and actionable insights, helping them understand and navigate the complex movements of the crypto market. And my passion for the space is fueled by its rapid evolution and continuous learning that it offers, which allows me to stay at the forefront of financial innovation and financial markets. And I've seen many of even my friends and people, my peers of similar ages, who try to get into crypto at a younger age, and they the first thing you do is you go and watch the biggest crypto YouTuber, and uh, generally the kind of analysis they go into, it's very detailed and in depth. So I like to break it down in a way that's both beginner and advanced. It's friendly for people of all trading experiences. So that's what I'm trying to do in on my YouTube channel and in crypto.
Love it. Love it. You're referring to your friends and peers of the same age. What is the age that you're talking about?
So I'm 15 years old. Many of my other friends around the same age as 15, 16 years old.
15 years old, right? So see,
Yeah.
when I was your age, Arman, I was probably so much more inclined, to kind of like just study a little bit of the maths basics, back in a high school and so on, and definitely didn't have anything on my end, on my mind to anything that regards cryptocurrencies, trading, investing. So that sets the precedence. In your particular case, Arman, I now know that I'm talking to a very highly intellectual person, right, at such a young age, who can speak so freely and so accurately about the markets. And I know it because you and I, we had this discussion before, and now it's going to be an excellent opportunity for our viewers to learn about the rising star of this industry, right? And this rising star is named Arman. So moving on to the next point about why technical analysis matters. Why did you take up the technical analysis in the first place? Like, what does it help you do? What does it help you achieve? Why is the key question. Tell me about it.
So firstly, many skeptics like to argue that technical analysis it's ineffective or even redundant. But personally, I strongly disagree with this perspective because to me, technical analysis it's an essential tool for understanding market trends and effectively trading financial assets, whether that's stocks, crypto, or any financial asset that you trade. The beauty of technical analysis is it lies in its subjectivity. It's not just about the charts or the numbers; it's how you interpret these patterns and what they signify in the broader market context. Each trader has their own bearing, has their own. They bring their own perspectives to the table, which means technical analysis is not like a one size fits all approach, but it's your personal interpretation of market movements and price action. and it lets you give a personal touch, which allows traders to develop unique strategies that resonates with their individual risk tolerances and trading goals. And by studying historical price movements and market behavior, technical analysis, it empowers anyone to make more informed predictions about future market trends, turning seemingly random fluctuations into actionable insights that you can forecast ahead of time. And in a field which is as volatile as cryptocurrency, dismissing TA is overlooking a crucial component of market understanding. And it's much more about predicting movement. It's about gaining a deeper insight into the emotional and psychological state of the market, which can be pivotal in decision making processes, especially in something like crypto, where, like I said, it's extremely volatile. And when you can understand technical analysis and what's going on in the charts, uh, you have a better understanding of what's going on. For example, if we look at last summer of 2024, Bitcoin was consolidating, had been consolidating sideways for 8 months. Most of 2024, we were just chopping sideways. People were worrying that we're going to break down, the bull market's over, and there was a lot of FUD and fear. But if you knew how to analyze charts and you were paying attention to the technical analysis, you could see what was really going on, and that we were just ranging sideways, and it's perfectly healthy for an asset class and something like crypto, which when it moves up and down, it moves at an incredible speed to both directions. So a consolidation is perfectly healthy for an asset like crypto. And if you were in TA, you knew exactly what's going on. And I believe that when you're trading any financial asset, you need to have an edge in the market. And for an average person or retail trader, TA, it's the perfect way to go because anyone can log on to TradingView, uh, watch some YouTubers or technical analysts, see what they're doing, and practice themselves, put it into practice. Uh, Try trading with your own analysis. And I think it's a perfect entry into analyzing financial assets.
Yeah, one thing I can immediately tell you, Arman, is how much I really appreciate and commend on this incredible nomenclature that you had at such a young age, which is, I think, you're literally one of the brightest stars, that I see are going to be grow extremely big wherever they go. And see, what I'm seeing right now is a 15-year-old man, right, with a knowledge, with a comprehensive knowledge and that can define definition that can put together like definitions for very broad terms such as technical analysis. There's this trend existence, just like you mentioned, those chart patterns. Those are very complex kind of like behavioral finance uh, principles and observations, and yet you make it so simple. That tells me that it had to be a specific event, excuse me, over the last years that kind of like immediately, like if you put it on a timeline, that there was this significant spike and surge of interest on your end on how the like for finding the answer on how the financial markets actually move, right? So when did you kind of like discover this passion for technical analysis before we pull up all the other charts?
The first thing when I started researching and learning about crypto, one of the first things you think is, let me go and look at the charts. And then you see the experts, what are they doing? And all of them, they're analyzing charts to some extent at least. And so that's the first thing I went into before even researching crypto or stocks or like the businesses or crypto coins them individually.
Mhm.
I went and looked at the charts because I thought that's all that experts do. They go and look at the charts, and that's what you do in order to get ahead in crypto and just trading in general. So that's how I got into TA. Then I went on to, I just spent a while practicing just drawing, analyzing charts, different coins, different stocks, watching what are other people doing, and then I just started to gain the hang of TA, and then from there I started to get more into. I started to research crypto, stocks, bonds, all kinds of financial assets. But the first thing I did was TA because that's what I saw the experts doing, and I think that's a very natural way that people start. They see what smart people are doing in the space.
Correct. And luckily or unluckily to us, this process never really ends, right? You kind of like continue to fight all those, especially with the development of the AI these days. You see so many of the people kind of like try to bring up and break the code, break the system, with utilizing the tools based on AI as and asking ChatGPT, hey, give me the simplest strategy that is gonna make me a multi-billionaire tomorrow, right? Things like that, even though things like that, do not exist per se, right? It's impossible kind of like to even if there is like an immediate edge like that, it's going to be arbitraged away because of the accessibility of the internet. Everybody can Google this, seemingly holy grail, and just it's not a holy grail anymore if everybody knows it. However, knowing that it's a process that lasts and lasts and it goes on and continues, how long has the process lasted to you so far?
I've been learning. Uh, I've been actually practicing and learning technical analysis for uh, nearly a year now. Because,
Mhm.
of course, like I said, when I first started to really get into uh, trading, that was the first thing I did. Prior to that, I had some basic understanding of cryptocurrency and the stock market. I held some crypto in the last bull market. uh, I obviously round tripped everything I made and ended up selling it in the bear market, ended up starting off scratch. Then bought, I started to accumulate more crypto. And then when I really started to get into it, which was, yeah, around a year ago, the first thing I did was really research TA. And then I started to expand my knowledge from there. But yeah, it's been now around a year since I started learning and practicing technical analysis.
What an incredible wealth of knowledge for a 50-year-old man starting gathering, the knowledge at the age 14. So let's show a little bit of your skills, right? I know that you have prepared a couple of charts. So why don't we pull them up and you kind of like can tell us perhaps and guide us through what do you see, why you've marked all those crazy lines, why the colors look like that. How do you see the markets through your lens, Arman?
So right now, the way I see it is we're amidst a major accumulation phase or consolidation phase here. What we have here is this is exactly what I was talking about. If we look at what I've circled here, this was the summer of 2024 when I said that Bitcoin was just chopping and consolidating sideways for numerous months on end. We saw here Bitcoin was forming a bull flag pattern there, which is basically what happens when you have a sharp appreciation in price, followed by a consolidation sideways, which can be. This is a downtrend here because we see those two lines coming down, but you have very similar patterns. You could have the same thing where the lines are going up, where you form an uptrend, but you're still consolidating. Here we were in a slight downtrend. We are still consolidating, and this is when institutions were really starting to accumulate Bitcoin. So the reason why I was saying if you were looking at TA, you knew what was happening next, what was going to happen next, was because we had the sharp appreciation in price. We had been consolidating for months. People were giving up on crypto, giving up on the bull market, when based on the seasonality and the uh, historical price movements of Bitcoin, it didn't make sense that the bull market was over or to be giving up at that point. And that's what smart money was doing. They were accumulating Bitcoin during this time. So, as expected, you had the sharp appreciation, you had the consolidation, and then we had the breakout towards the upside. But we're now amidst another consolidation phase. And the reason I'm calling it an accumulation phase is because we are chopping sideways, we are consolidating, but I do expect to see continuation higher very soon. We have multiple bullish catalysts in the markets, such as the first ever pro crypto US president who's coming into office, which we'll get to just now. But this is a fractal, what we can see on the chart. Uh, because this is basically price action repeating. And what I always say is that fractals tend to repeat because human psychology never changes. Here we had the first push higher off of those bear market lows, uh, at around $15,000 just after the FTX collapse and the entire bear market, where Bitcoin drew down, altcoins drew down massively. We had that first push up. We had this little trading range which was being formed also in the summer. So this was the summer of 2023. We then pushed up, rallied in quarter four of 23, which is generally a very good period, quarter three, for crypto and risk on assets in general. We then saw a push into year end, and it was in December and January of 23 to 2024 that we had one of these consolidations, which did end up being an accumulation, like I was talking about. And the accumulation was confirmed because we saw that push higher, which took place in quarter one. We found the top in the local top in late quarter one of 2024. And then we had yet another sideways summer, similar to what we had in 2023 summer. Uh, and this, of course, led to a break towards the upside. And we're now where we had the quarter four into year end Bitcoin and crypto rally. And we're now having that December and January consolidation phase. And I, of course, expect this. I'm calling this an accumulation phase because I think Bitcoin's price is going higher. And it's always at this point, this is where the spot Bitcoin ETFs launched. So institutions were now able to buy into Bitcoin, and they were accumulating there, so they're always accumulating. Even without ta, they know what is going on with Bitcoin, because that's the thing, they have their edge in the market. For a retail trader or a normal person, your edge could be ta, which worked perfectly. But an institution's edge in the market is the information they have, the access to information, and that's how they understand what's going on, because their access to information far exceeds what anyone else will get if you're not an institution or an institutional trader. So essentially, I believe that with Trump's inauguration just a few days from now, uh, and all of the bullish catalysts we have this year, we have the Bitcoin ETFs continuing to buy Bitcoin. We have MicroStrategy buying. They now have over $40 billion on their corporate balance sheets. Uh, we have significant buying pressure, and the investor confidence as a result of all of these factors is in Bitcoin and digital assets in general is significantly increasing. And a fact I saw actually is that the BlackRock Bitcoin ETF now, in just a year, has received a total inflow of approximately $57 billion, whereas the BlackRock Gold ETF, since around 2000, it's over 20 years old now, has received a total inflow of around $33 billion only. So, what the BlackRock Gold ETF did in around 20 years, Bitcoin has outdone, nearly double in just 1 year. And this really shows the institutional investor confidence in Bitcoin, and it has a multiplier effect. You see the institutions gaining, uh, adopting Bitcoin, and then you move on to governments, and as well as that, more retail investors start to gain confidence. They see BlackRock, the largest asset manager in the world, $11.5 trillion assets under management, purchasing Bitcoin. And like I said, they tend to follow. We tend to follow people who are smarter and have more experience. So this chart really shows, of course, I've explained why I'm bullish on Bitcoin, but this chart basically backs it up. Uh, and I'm now expecting that we'll have, of course, January has been just about green, but we haven't seen anything spectacular happening this month, as we can see on the chart. We're the same price as we were 2 months ago, in terms of Bitcoin. But I believe that quarter one, so February and March overall, will be very positive for Bitcoin. And of course, this is backed up by the TA on the chart. We had that accumulation phase December to January. Same time this round, that's 23. That was 2023 to 2024 summer. 2023 December to January of 2024. Now, same thing is repeating to the exactly December 24 to January 2025 consolidation phase. So I'm expecting 2025 to be extremely positive, and I don't think there is much time left in this accumulation phase. So this is definitely a time to be buying crypto, and this chart is all you really need to see. And like I said, fractals tend to play out because human psychology never changes. Now, if we also go and take a look at the daily time frame, Bitcoin here is forming a falling wedge pattern, which is generally a very bullish one. And it depends how you draw it. You could call this a bull flag as well. Either way, both are extremely bullish patterns, and we can see now Bitcoin is it's breaking above that downward sloping resistance trend line over here, and of course this is to be confirmed in from the time of recording this video, 8.5 hours from now. On the daily candle closure, we've already had a few 4-hourly candle closes above now. So that, of course, adds further bullish confirmation. The Bitcoin is also testing a crucial resistance at 102.6K, which has been a major area of resistance in this consolidation phase or the accumulation phase. So we ideally want to see also a break above that level, because then you're also flipping that previous high. You're breaking above it, which was a lower high. We had a series of lower highs, and by breaking above, you now be forming a first higher high, and that would of course be a trend reversal, which you'd then be expecting to see a series of lower highs and higher highs breaking out of this consolidation phase and resuming the next push higher of this bull market. What do you think about that, Adrian?
Well, I think that you've just showed pretty much of a rock story analysis over a couple of time frames, which is a very good thing, Arman. And what I'm thinking about it is, before we continue with the charts, is I really admire how we kind of like apply the very simplicity of technical analysis, right? There is the entire science and kind of like I said, behavioral finance explanations, for why we behave certain ways and why patterns work, right? Most often the patterns work before we make them work, right? Even if we don't kind of like if we don't have a confirmation, in the scientific word that, for instance, a pattern exists on its own, that there are just different types of, symmetrical triangles or head and shoulders, so falling wedges in the chart, it truly doesn't matter, because there is an effect called thought priming, right? That we basically, our mindset and our subconsciousness very often determines the way that we act. And if we go outside to the park and we encounter a lot of greenery and a lot of nature, we might be subconsciously more likely to press on the green buy button than for the red button, for instance, even though it has nothing in common, right? And there are many of those factors that we kind of like psychologically jump on a bandwagon and mimic and copy paste different behaviors, even though they do not necessarily have to make sense, such as buy the support and sell the resistance. For instance, there's not a single scientific rule and explanation why that would work in effect. And on the other hand, the scientific and quantitative kind of like models confirm that the trend following systems relying on the buy high, sell higher tend to perform fairly better, right? Tend to have a better performance. And they may have a lower win rate for about like 3 out of 10 trades, maybe 4 out of 10 trades that are won, which means 6 or 7 losses, which is why it's so important to manage the risks and manage the losses, because there are very often more of them in the most profitable systems. I'd say that existing of those patterns materializes them to act, right? It's something that we know is a self-fulfilling prophecy. And the good thing is that it works not only in technical analysis terms in the cryptocurrency markets, but also on the other markets. So do you have, Arman, some other charts as well that you kind of like want to show us today to our viewers?
Yeah, I actually have a chart. This is of the DXY. the dollar index. And just to, I think what you said was absolutely correct about the buy high, sell higher, because that's what happens when we, like you said, we sort of manifest the patterns and the breakouts, like with the symmetrical triangles, the head and shoulders, bull flags, bear flags, all of those. Uh, but like that comes back to what I said about the TA is just your way of reading the market and what's going on. But of course, it's a self-fulfilling prophecy, and it there's no scientific proof to back technical analysis and the fact that it even works. But we tend to make it work when we see a pattern. You see a break of a trend, and you go long or you go short depending on what the trend break is. But yeah, and if we look at this chart here, this is the DXY, so the dollar index, which measures the strength of the dollar relative to a basket of foreign currencies. So those include the likes of the Great British Pound, the Canadian dollar, the Japanese yen, the few others. But when the dollar rises, this tends to have a negative impact on asset prices, which are denominated in dollars, which is a significant portion of assets. I mean, all crypto is denominated in dollars or USDT, which is pegged to dollars.
Yeah.
So when the strength of the dollar is when the dollar strength is rising, then the asset which is denominated in dollars tends to struggle. So currently, Bitcoin is actually performing very well when you think about the fact that what it's denominated in is rising. And if you don't understand, it's like if you denominate two and if you divide two by one is the denominator, and your answer is two. Whereas if you divide two by 1.5, you're not going to get the same result. So that's what's happening with Bitcoin, because we're denominating it. When the dollar index was at $100, for example, it would be much better for Bitcoin than it being at 109, because Bitcoin is
Yeah.
denominated in dollars and not another foreign currency. And 60% of global bank lending is denominated in dollars. 70% of the global debt market is denominated in dollars. So a significant proportion of assets, whether it's the S&P, the Nasdaq, Bitcoin, or any of your favorite altcoins, they're all denominated in dollars. So we want to see the dollar rolling over. And I've actually found something very interesting on the chart. So firstly, of course, a few weeks ago, or back in September, the dollar started to rise. And it was really in November, when Trump won the election, that the dollar started to rise exponentially higher at about that point. And we broke that trend, which didn't look like it was going to break until then. Of course, you had a successful retest. But if we look at the timing factor here, and we look at Trump, the time when the last presidency, there's actually an indicator here, US presidential elections. You can see that in that's November as well of 2016, Trump won the US election. And in January of, so that's around the 17th of January in 2017, so just around 2 months later, Trump was inaugurated. But earlier on in January, the dollar index topped out. So this was, of course, had a positive impact on financial markets. And this was just a few weeks prior to the inauguration. Of course, we're now leading up to the time of the inauguration, and the dollar has not yet topped out. We've been seeing consistent green candles. That's 6 weeks of consecutive green candles. But with Trump's inauguration next week, it's potential, if the weekly closes somewhere like this or potentially a bit lower, we'd want to see ideally a close below say 108.92, and that would confirm a bearish engulfing on the weekly time frame, which would signify a trend reversal, and we'd likely see the dollar rolling over there, and that, of course, is further the confluence is the timing factor. It's only a matter of time before the dollar tops out, because the market has been pricing in Trump putting tariffs on all tariffs on Canada, tariffs on China, which is why the dollar has been rising relative to other currencies. But it's all just negotiation tactics for now, at least. So if that's what you want to see, the weekly closing below, and then of course you have the bearish engulfing. But if we look at the RSI, which is at the bottom of this chart here, I've marked out in yellow the level 70, which is the bottom of the oversold area of the RSI, which is where you tend to see local tops or just tops in general. And it was actually, if we look at the point where the DXY topped out back in January of 2017, it was when the RSI hit 70 perfectly, nearly to the dot. And this time round, we're seeing a slight minor pullback in the DXY while we've hit 70 perfectly again, the bottom of the oversold area. So I think it's just a matter of time before the dollar tops out, and this could be based on the charts and the timing factor, this could be that time. And when this does happen, I'd expect to see a massive pump in asset prices, because Trump, he had a very good stock market performance in his previous run. He doesn't want the dollar to be extremely high. He doesn't want interest rates too high. Of course, that's out of his control, monetary policy to some extent, as in if he has policies that can help bring down inflation, which allows monetary policy to come down or to ease, then the dollar topping out is inevitable. What do you think about this, Adrian?
I think that's a masterclass, yet another masterclass on the dollar and on the other markets. You noted it very rightly. That when the dollar rises, it actually puts a lot of pressure, relative pressure, on the assets that are denominated in dollar, which kind of like takes me to the last point of our today's interview, right? Because having the dollar strength and potential an inflection point, just like you're talking about, the Trump's inauguration and potential financial easing that may be ahead. That is going to support, the rising economy and so on. What's the plan? The one kind of like, or two golden tips, that you would want to leave our viewers and listeners with to get them ready for what's ahead this and next year.
So 2025, and we've also previously discussed this, 2025, it's the third year of the 4-year Bitcoin halving cycle. We had the halving last year in 2024. I think it was April. And what this causes is a supply shock, because Bitcoin is continuously being taken off of exchanges into cold storage where people are holding for the long run, which is exactly what I believe people should do if the best investment that you can make if you're planning on holding something for, say, 10 years, 20 years, or just decades is Bitcoin. Bitcoin is still only at a $2 trillion market cap, whereas something like the S&P, it's at a $47 trillion market cap. And so there's still a long way for Bitcoin and cryptocurrencies in general to grow. And going back to what we said about the 4-year cycle, I believe 2025, since it's the post-halving year, it's generally the last bull market year. Like 2021, that was the peak of the bull market post-halving year. 2017, peak of the bull market, it's a post-halving year. Same for 2013. And then you end up going into a bear market the year after. I've seen people talking about the fact that maybe this time will be different. But generally, when people say this time will be different, it's not. And that's one of the worst. Sorry?
It's never is. Just exactly what you mentioned, Arman. When people say this time is different, it actually never is, right? So I think the bottom line conclusion for all the viewers and listeners, to get a kind of like a closing statement to our show today from Armaan Savjani, our today's guest, is that there's a lot of excitement to be had. There's a lot of positive expectations for 2025 with a big dose of warning for 2026. And what an incredible session that's been, Arman. Hearing all those incredible insights, from a person at your age, at the age of 15, when I'm double your age, I'm actually bald and have a gray hair already, right? Which is which is what doesn't really add up to my knowledge. However, it's so much of the appreciation, so much of a commendable attitude from your end, open mindset. You know, the hunger for growth. I think you're gonna grow wherever you go. You're gonna grow very big in your life. So please keep on doing that and following your incredibly hardworking path, because it's gonna take you into places you can never expect. You can never know exist. You do not even know exist, because they're gonna place you very, very highly in the world. So I'm a big fan of yours, Arman, and for everybody who's watching, and listening, feel free to go ahead to Blog Talks. Right, it's gonna be
Yeah,
under Blog Talk
blog
with
talk.
a Blog Talk at Blog Talk with an four instead of the Blog Talk Blog T 4LK. Make sure you hit the subscribe button. Follow Arman if his incredible works on his journey. This is one of the rising stars. Everybody, it's been such an incredible, magnificent pleasure to be your host today. My name is Serjan Zdunčik, CMT Charter Market Technician, and that's the wrap of the show. Arman, thank you for coming over.
Thank you very much for having me on your channel today, Adrian. It's been a pleasure discussing the world of cryptocurrencies and digital assets, and getting the chance to share my perspectives on the evolving landscape of digital assets. And thank you for your kind words. It was a pleasure to be on.
I appreciate it. Roll on to the next one.